So let's take some questions. I like questions. What do you guys got?
Hey everybody, it's Dave. I'm back with a long-awaited MakerZone around Startup Bootcamp. We're here in the city of London this week doing a big tour. I'm here with Gregoire, and I wanted to introduce the concept of what's a real accelerator. I had a lot of questions over Quora, Twitter, and newly in Whale, which is, for me, brand new. Thank you, Nick, for showing me that. So let's talk about accelerators today and what we're seeing in Euro-FinTech, since a lot of the scene happens right from here in London with other European startups. You want to introduce yourself, Gregor?
Sure, with pleasure. So first of all, thank you guys for being here. It's great to have you. So I'm Greg Michel. I'm originally Swiss. I started after my studies in St. Gallen. I started working for Deutsche Bank for a while.
We're at HSG. It's St. Gallen.
Yes.
Wow.
HSG. Yeah. Yes. Interesting. Good school. So I started working for Deutsche Bank, investment banking side. That was on the market side.
Like here in the city of London.
Here in the city of London. I started in Zurich, and then I went over to London here. Stayed here 6 long years. Painful years as well.
What years were these?
These were 2006 to 2007 actually to 2013. So
boom.
Yeah.
Crisis.
Yeah. A lot of bloodshed. Stressful, but yeah, incredibly fruitful experience for me, because I had these. I found myself in these situations where we had to reinvent the business within a big corporate.
But how do you bridge from that to Startup Bootcamp? I mean, it's the antichrist of banking, right? I mean, this is like where new banking is being made.
Yeah. So the bridge was made when so a bunch of my friends started startups, and they were always interested in that area. And I thought, okay, maybe I could do the jump, but it was never the right time, and I never felt like it was the right time. And then I invested in one of the startups, and I thought, okay, fine,
really?
This is what I want to do. And so 2013, quit banking, never looked back, and of all places, I went to Seattle.
Really?
Yeah.
Just to live in Starbucks on free Wi-Fi.
That's pretty much it, yeah. And also, one guy, a friend of a friend, was building there a new startup, and he was that was David Racker. It was the guy who had built Redfin. I don't know if you're aware of it.
I've heard of
in
it.
the US. Yeah, the massive online brokerage in the real estate brokerage in the US. And this guy was building something new there. And I thought, okay, fine. You know, if you're building a $600 million juggernaut, you probably the next one's going to be successful. So I worked with him for a while. Funding took a bit more time than, I don't know if you've heard this, that funding always takes more time.
Yeah, then you have to double the time.
Exactly. And so visa was a bit of an issue. Luckily I found a venture capital fund that was willing to hire me. And so I went down to the Bay Area.
So you worked for a VC?
I've worked for a VC.
Yep.
It was a nanotech focused VC in the Bay Area, just above Palo Alto. Mm-hmm. Amazing experience. People would come up with
so then Silicon Valley.
Yes. And people would just like...
Now I understand the CV they got you here. Okay.
Yeah, exactly.
At first I was like, a big bank straight to here, that's a little difficult.
Yeah, exactly.
Now I get it.
Exactly. And then I came back. I just realized I didn't really want to be a VC. Mm-hmm. Or maybe not exactly now. And I just wanted to be closer to the action. I understood finance. I understood technology. Put it together and you have fintech.
Do you know, I did a side story. I just had the same conversation with a prominent international wealth management head yesterday at a conference I was at. And, I think that VC is also super constrained because it has to produce revenue in a very short time frame. And therefore it goes for the lowest hanging fruit, which is how you make a business. So you execute a business on the premise that you can make money, but it doesn't actually throw a lot of long balls either. And that's where I think banks have the opportunity. We have more capital, more patience, and should throw more of the long passes. We look out to the VC startup world as creating the future of banking, when in fact we're the best positioned to create the future of banking.
That's absolutely
so
right.
If you can take the ideas of a startup and throw in the long game that a bank actually brings to the table, we could do it better, but we could all do it better. That's the challenge here for me and MakerZone. But do you want to talk about fintech and like what is fintech? Because a lot of people have asked me, what does it actually mean? People not from the finance or banking industry don't know. And
yeah, so fintech. So fintech, of course, is short for financial technology, and you can imagine. So it's basically everything related to. Now it's just I think it's a catch-all term, which I'm struggling with. and as it matures, it's become more defined. But think of it as every technology right now that relates to money transfer or transactions, and that goes from payment to banking to how money is managed, earned, saved, transferred, everything that relates to money.
The red thread of money all the way through the life cycle.
Exactly,
Yeah.
and that would be basically fintech. I think. I mean, it's a new term, right? It's been coined, I think, in 2011 or something like this.
Yeah, right around the time I started with it, it was a brand new thing.
Exactly. People have been doing fintech for a long time. I mean, everything, when you think about financial technology, if you think about all the payment industry, etc., is pretty, really old. PayPal.
It's pre-2011. It was,
correct.
What, 2005?
Yeah, something like that. And that is fintech. Yeah. PayPal is like one of the big, and they're actually driving the innovation now with Braintree. And it's just, so that would be fintech. It's a very loose term because some people, for example, take insurance technology when there, which earn its own term as
moniker, InsurTech.
InsurTech,
yeah.
Exactly. And then within the financial system, then you would have regulatory technology, which has become RegTech.
RegTech, yeah.
So now we're just, as the industry, so to say, matures, you find these new silos that have their own term.
But people have to understand why this is important to us, because a lot of the venture capital money, I mean, startups drive the new innovation models. Innovation drives what businesses will be doing in 5 or 10 or 20 years. You can watch retailers die off. You know, anybody remember Montgomery Ward, which became Target and Walmart, which became Amazon and eBay? Mm-hmm. Things happen really fast, and innovation tries to prevent losing the business and also creating new P&L and new business. So for us, fintech, insurtech, regtech is trying to drive out the bleeding edge of the banking business to keep in business.
Sure.
And grow the business.
Yeah, definitely.
So for me, it's super important. Can you talk a little bit about why Startup Bootcamp was formed and what you guys do with fintech? Because this is, as I understand it, the only vertical industry you cover here, right?
Actually, we have 3 out of London.
Okay.
And happy to talk about them. So Startup Bootcamp was founded in 2010. So we're very much a startup ourselves, and it was founded in Denmark by 3 or 4 guys. I need to get this right. That just witnessed the fact that in the US you had Y Combinator and you have 500 startups, and they had a great success. And these guys thought, it's crazy that we don't have this in Europe, so why don't we do it? And they really did that, but they did that in a particular way. They did it from a corporate innovation point of view. It wasn't an accelerator for the purpose of building an accelerator. It was an accelerator as a tool to innovate for a corporate. And this is something that is very important, and this is what drove effectively the structure that we have now at Startup Bootcamp, with each program having their own corporates, their own corporate partners.
What do you mean? So each industry has its own corporate partners then?
So each vertical has a different set of partners, but within each geography in the vertical, you have different partners as well.
Yeah.
So, and this is because we want to make sure that every single time a startup comes in, that we give them access to a set of partners that corresponds to the market that they're going to try and go after. But some of the partners that we have, for example, if you look at, for example, MasterCard or PwC, they're global partners, right? So, so from that point of view...
So they're meta partners who say, this is a virtuous thing. We want to be on the cutting edge ourselves.
Exactly. And so we want to find startups that will help, as you said, innovate and stay at the bleeding edge, because we want to either drive more P&L or keep our position in the market.
But people are cynical about this, right? I mean, I'm an innovation manager at a big bank. All I hear is cynicism from outside, from inside. You can't really innovate at a bank. Corporate innovation isn't where innovation happens. Look at Uber. And everybody comes with the Uber, Amazon thing to me. And I kind of say, look at the Post-it, right? I mean, corporations do innovate continually, and they drive the economy, and startups innovate and drive the economy too, but not everybody's Elon Musk.
Yeah.
And, you know, some of the big banks still are very good entities that drive a lot of the economy. So I think it's worth fighting for, but
it is absolutely worth fighting for. And I think this is one thing that in fintech is excruciatingly clear. There's been so much press written about if you don't innovate, you're going to die. So it's innovate or die for banks, which is not necessarily true. There is a level of that, but I think banks are here to stay in a way, shape, or form. But that's still to be decided. But they have to innovate, and they know that. And so, what we've seen with our corporate partners and what they tell us is that, listen, it's great that you bring us startups, but what's happening is that because we have to deal with startups, because we want to innovate using them, we have to also innovate on our processes. We have to make sure that our senior staff knows about it and is backing that trend and that movement. So from what they've been saying, it's very much also internally an evolution, but that needs to happen. If you want to innovate, you need to innovate internally, and you need to have people on your board that drive this change, that have the vision to say, you know what, we need to change. And then your innovation strategy depends on
I think that's right. I think that's right. But you feel a different, like, it's loud in here, and you see people running, and you see action, right?
Yeah.
And if you go into the average bank, it feels pretty stiff. People are at computers, right? I mean, it's very, because that's the rules, right? You have to act and be a certain way, and here it feels a little bit more free. Or does that help people innovate more, do you think?
It does. I think you need to give the freedom to people to innovate. You need to give them that security to say, just come up with an idea. If something doesn't work in your bank or in your corporate, just like come up with an idea. There needs to be like a place where you can say, the process that we use are old, retarded, stupid. They could work better. Actually, I was recently in Berlin at the Swiss embassy and just giving a panel talk there. And one of the CEOs of a smaller bank in Switzerland came to me and said, oh, that was a really interesting thing. Let me tell you what I do in my bank. You know what the guy tells me? He goes, so I think he did that twice a year or once a year. I asked like all the head of my departments to just come up with ideas of how they would make the business better. And they're pitching for it. So 5 minutes, they all sit in a room and they have 5 minutes to pitch their idea. And then everybody votes on it.
And does he seed? Oh yeah, so they vote on it, and then he
And
seeds the best ideas.
Exactly. And so this guy then integrated with a startup now, and he's just like for invoice financing in Switzerland. How amazing is that? It's a small bank, just already doing it. It's possible. You can do it.
Okay, and you guys are just near Demo Day.
Yes.
If I got that. Was that Edwina just going on?
It was, yeah.
Yeah, good. We'll catch her later.
Yes.
Like, you guys are close to Demo Day.
We are next week.
And what does that look like? What do you guys do there?
Awesome.
People don't know what an accelerator means. Like,
Right.
some of my family members who will be watching this, right?
Okay.
Mom, an accelerator, right? Like, this is, you have to explain
This
to
is what it
people.
looks
What is
like.
an accelerator in fintech? It sounds like Greek. Like,
Yeah. So an accelerator is a program, generally 3 months. So conventional wisdom has it like it's 3 months. If you look at our competitors, they also do it in 3 months because that's an acceptable period of time. It's a 3 months program during which we take 10 startups that we scout from a very large number, and we can talk about this a little later, that we scout and that are going to go through a fairly intense quasi-academic courses where we'll bring experts in their own field to teach them about everything that goes into building a successful global business. And that is that's something that what we aim to achieve is during 3 months to give them the equivalent of 18 months of growth on their own. So we're supercharging them.
Yeah.
And we have basically, the way that we achieve this success is using 3 things. So these courses. The second thing is our mentoring. So these are guys who are expert, again, in the field, in the industry. But I could be also like a CTO, someone who's done a business before, or someone who is an expert in, like a law expert, right? Anything like that. And the idea is to bring this expertise in. And these guys give their time for free, right? So they just give their time for free.
Yeah, we do
They come
this.
in.
All of us do this.
Exactly.
Because you can learn a lot as well from
Correct.
it. So you get both ways.
Absolutely. And so these guys come in and give their time and really mentor. It's a very hands-on mentorship. And this is something that we have that defines us as well.
I can say in the first class you ever had in fintech, right? I was in here. I met with James.
Yeah.
He had the consolidation of peer-to-peer platforms because that was very 2011, 12, 13.
Yeah.
And he taught me probably in that first half an hour that he talked with us, he and his CTO, more about peer-to-peer lending than I had read in all the big name consulting reports that I'd read that year. And I probably read 40 reports.
Yeah.
And I learned more from James in the 20, because he's been through Acceleration. So they'd done the market research.
Yeah.
So for me, it works. But
Yeah.
what is it that you end up with? And how do you actually pick 10 companies? Like, do you look at 100 companies, or how do you?
No, so it's a lot more than that. So even for FinTech London globally, we looked this year at around about 2,300 companies that we went through. Yeah, it's a very large number. Out of these, we got in touch with 800 roundabout. This drove around about 400 applications. And out of these 400 applications, we selected only 20 that we brought to our selection days. And selection days are 3 days. It's absolutely grueling. It's actually 2 days of meetings, but during those 2 days, you're going to have around about 40 meetings with our mentors, with investors, with our corporate partners, and with our staff. And once at the end of it, we just get all the.
I think there's actually a fire in the building. We may
Is
have
there?
to cut off. No, somebody got a customer. Wait a minute. Go on. Can I just draw that quick? Can you swing the camera?
Yeah.
You guys understand what this is about? So, to me, you guys are doing an exceptionally steep funnel. Usually it happens in, say, Andreas and Horowitz, right? They'll interview a couple thousand companies themselves a year. You're doing the same process. But they'll do it all bespoke. So 2 guys in a room with all these startups, and we'll just do it privately, right?
Yeah.
You're doing it openly, transparently. So you're taking 20, whatever, say
It's
3,000.
one with 2,300.
2,300.
Yeah.
And that funnels down in the end to 10 that you're
Correct.
accelerating, incubating, helping, curating
Correct.
for a 3-month time period. And then they come out of a rocket.
Yeah.
And they launch as a business, or they die right there, probably.
Yeah, pretty much.
But that funnel goes through like several stages then of cuts.
Yes.
So
correct.
it works just like a venture capitalist does.
Exactly.
Okay.
And in fact, if you look at the number of companies that a typical venture capital invests in, that funnel is even more brutal than any venture capital you'll see. It's generally, for venture capital, it's generally like 0.5, 0.8%. Like, look at our number. It's just,
Because they've got big money.
Yeah.
And so they just fund, they kind of see the
Yeah,
lot.
but what you said, they have to, right? They're under pressure, they have to. So that's why a number of venture capital funds have this fear of missing out. It's like when they see that the deal is hot, then they think, oh my God, okay, fine, I also need to get my money in there, right? And then it becomes this competition.
Can I ask you, how many of these 10 in Startup Bootcamp here, and then can we cover it globally?
Sure.
How many of these are Euro-FinTech? Because I got a lot of questions about, what do you think about Euro? It's always Euro-FinTech.
Yeah.
People have this national or regional pride.
Mm-hmm.
Have you noticed it? So
Yeah.
in Switzerland right now, it's Swiss FinTech with the Swiss flag, right?
Oh,
and
yeah.
then in Euro, it's Euro-FinTech versus American FinTech. And then
Yeah.
Asians are like clamoring at the door saying, Asian FinTech.
Yeah.
What is your feeling about like how much is really true European, and does that matter?
So, so how much is truly European? Right now, we have 9 out of 10 teams that are European. But this has not always been the case. In the previous cohort, we had a team from Russia, we had a team from the US and Canada. So it was very wide, and we're very global. We scout on a global basis, right? This is not European, it's global.
So this big number here was a global
Yes.
number. So you had some Singapore, some
Correct.
Hong Kong.
Yes. And so, so that's one part of the answer. The second part of the answer, does it matter? No, it doesn't. It absolutely doesn't. In a place in the world right now, in an era where basically the borders are coming down. Well, I mean, now with Brexit, it seems like people want to keep building
Put
up
some borders
walls
up,
everywhere,
yeah.
right? I mean, that's a big trend right now, walls.
We'll
That-
hashtag Trump election on this. Why not? It's good for
Please
SEO.
don't.
Come on.
But it's just easier than ever to move around.
Yeah.
Things are in the cloud.
But it's
you
honestly
don't
not a
understand.
bias towards Euro FinTech, or do you? Because
Absolutely not.
SUBC Startup Bootcamp went globally, right?
Yes.
So you've got like 5 FinTech verticals.
We've got
5?
so we've got 11 verticals.
Yep.
And so FinTech is one of them, and FinTech has 5 locations now.
5 locations.
Yes.
Okay, so but you see this one more towards Euro probably. in
Yeah.
London.
Well, I mean, by definition, if you think people want to come to London because it's the center, it's the world center of FinTech. That's just what it is. And so by definition, the quality of investors you will have, FinTech investors, FinTech mentors, everything will be higher here. So we have a tremendous pull to come to London because, of course, people want to be a part of it.
Mm-hmm.
But if you look at the way that we're structured again, that it's an accelerator that will help promising company, but also in collaboration with big corporates, and this is something that is excruciatingly important. We collaborate with these corporates, and they want one of the big KPIs for Startup Bootcamp is how many pilots do the startups develop with our corporate partners. This is what it is. These corporates.
Let me define that. KPI means
yes.
Key performance indicator. So usually it's a measurement or metric of how much traction a startup is getting, which means
Correct.
Are they going to survive and make a viable, fungible business out of it or not? And if they're not, people start pulling the plugs and they don't invest in it.
Exactly.
So if their KPIs are lit up green, then people do invest more and they start to grow, right?
Exactly.
It's like watering a plant, basically.
Basically, yeah.
What do you think about the strengths and weaknesses of the various Euro-FinTech you've seen? Because I've seen Latvian, Lithuanian, Russian, Italian, we have an Italian over there, fintechs.
Yeah.
Is there any relative strengths or weaknesses of the teams that you see, like the people, the individuals, the skills?
Yeah. So that's a bit of a sensitive question. So I'm going to try and just not
Delicately.
Right, exactly, tread delicately. There are different places that produce a certain kind of people because the economy or the financial tissue. I mean, the make of the financial markets is such. For example, in Israel, there's a lot of people doing security,
yeah.
and authentication. Very, very good at it.
Mm-hmm.
If you look at France, they're generally technical. They're quite technical. If you look at
But their front end design, just my personal view, feels very constrained, right?
Correct.
The French one is always foreign to me.
yeah.
Like I'd almost rather have Asian. Like the French user design to me is usually very foreign, and the German user design to me is like driving a BMW. There's like 10,000 buttons and dials, and I don't know what to press. Where's the gas? So to me, it's usually the British design feels more natural because maybe it's just because I'm an English speaker, but I don't know. But what do you guys see?
I mean, on the front end, it's difficult. For me, it's difficult to comment because it does feel a bit this way. I'm very partial on design and UX to the Nordic ones because I feel like they have the sleekest, nicest. It's unbelievable. But yeah, so that's my idea. In terms of other skills, of course, like the Baltic countries, Estonia, incredibly strong, very good programmers. Mm-hmm. We see very good programmers now also in Hungary, in Czech Republic as well. Some of our guys outsource there. And they're super happy. So I want to
explain that as well. I have a lot of questions that piled up around: do you outsource when you're doing innovation, and do startups actually outsource some of their coding and programming that you see, and why do they do that?
So that's the age-old question, and people have the different school of thought. I think if you want to outsource, you need to be very sure. You need to be able to do the quality control behind it. Is do you know, first of all, what are you outsourcing? This is the first question. What are you outsourcing? And this is a key component. You cannot be outsourcing something that is going to be key to your business. If your business runs on a specific kind of algorithm, you need to be able to understand it from A to Z. And this is something that is super important. So what you outsource, this can make or break you, right? Yeah. So if you want to get funded, and if a VC asks you, okay, fine, tell me like that key aspect, are you doing it yourself? And you're like, oh no, we don't have the capability. That's bad. If you can say, I have a CTO who manages devs because he's been a project manager or a product manager, and he knows how to manage developers, then that's fine. Okay. Right. So you need to build that capacity. So it's on a case by case basis, but never outsource anything that is key to your business. If you are unable to do the
one more definition, because learning is a key portion of this, and showing the process, right? I always like to show devs means developer means an IT guy, information technology means a software developer, but he's much more than that now. So guys who can actually code up the system, the ones and zeros behind something. So it's important to know that a lot of the startups that we see in fintech, the tech word comes in because it's run off of digital. Yeah. So I haven't seen a manual business come along out of fintech. It's always the premise is digital business, right? Yes. Yeah. Have you seen the same from your class?
Absolutely. Everything is run on digital. It's run very lean, which is with very few means. So generally you don't have servers. It's all on the cloud. It's you're just piggybacking on the service of like people that will give you that for very cheap because they do that at scale.
Okay. Can you talk one last question, because we're now about the time I wanted to go. Like, what's your class? What are the strengths and weaknesses of class? Have you got any good prospects in there? that we should be looking at today while we're here?
Yes, we do. There are a bunch of ones. There is one actually that will be very very interesting for you, and it's our startup in residence. They don't get properly accelerated because the two founders, Nigel Verdon and Clive Mitchell, he's co-founder of Currency Cloud. Yeah, exactly. So they're here downstairs, and what they're doing is they're enabling that platformification of bank as a platform.
Good.
And their tagline is that they want to enable the fintech startups to connect to banks within 5 lines of code, right? So basically what it would mean is that you would, as a fintech company, you would be able to provide the services that a bank provides normally to your client. Mm-hmm. And they're the platform that would allow that. So really when you think about where the future of finance is going, where the future of banks is going, this is where it's going.
2 quick definitions. What does in residence mean? It means they didn't make the cut in the 10, but you're supporting them here because they're...
It's slightly different. They did make the cut,
okay,
but they don't get the traditional acceleration package because, of course, they're experienced founders. So basically what they do is they teach also the startups what to do and how to fund, etc. So they're more kind of like mentoring as well.
So they give and take.
Correct. They're give and take. Exactly. Another one that I want to mention is an Indian team actually, called Enterprise Bot, and these guys do chatbots.
We met them yesterday.
You did?
Yes, we're doing a MakerZone on them. It'll probably come out before this one, or we can do it after this.
Awesome team. Awesome
really
team.
Good.
Absolutely love them. Off the chart execution ability, and really in a space that's super hot right now. They're getting so much traction. Basically, what they're doing for your viewers is they're creating a chatbot. So basically, it's a program that would respond to your frequently asked question to a bank. So I want to cancel my card. I want to how much do I owe on my credit card? Anything, suggest new loans to me, etc. All these things that previously go to a customer call center, now this can be done very quickly on, when you're on the bus or anything, on the go, quickly do it. It's amazing.
Yeah, I agree. We did a whole episode on them yesterday because I think the whole bot thing in AI is taking off. So definitely. I just wanted to wrap up by saying we just covered a lot of technical terms about acceleration in startups. And Startup Bootcamp, to me, has been one of the ones who's been doing it authentically for real for a while. Now we have Kickstart Accelerator in Zurich. Mm-hmm. There's been a lot of other real accelerators that have spawned off the back. And that's a good thing because the more the better. So for me, as a corporate guy trying to do innovation, this is really good. So thank you, Greg, for looking at this. First time we ever met today, so I'm happy you're here.
Cool. Well, thanks for having me.
Cool, man. All right. Thanks.
So let's take some questions. I like questions. What do you guys got?